I want to bring in Oliver Pursche, 1879 Advisors Chief Market Strategist. So, Oliver, you say remain calm and invested. It's very hard to remain calm in this environment.
Absolutely.
How do we do it?
Well, so there's a couple of things in portfolio management that are good rules to follow, and that is don't overreact to news and let things settle. Now, the reality is that we're only 5 days into the self-quarantining for most of us, and you're already starting to feel the pressure. So we know it's going to get worse. Markets are forward-looking mechanisms, so they're going to rebound way before we feel the worst of the crisis, both in terms of the human toll, the health toll, and the economic toll. So that's why it's important to stay calm. Now, there is an opportunity for investors in this market to sell stocks at perhaps a loss even, and rebalance your portfolio as you think about your goals, as you think about which companies and industries might do well going forward, because it's going to be an uneven recovery. To the point that was being made before by Melody, companies like Uber and Lyft and Rent a Runway, even though they're private, are probably going to struggle a whole lot more than a Kraft Heinz or a General Motors will. So there's an opportunity to rebalance your portfolio.
Okay, so give us some examples. You just did a couple there, but of what you like besides defensive names. Fine, we're going to need food.
So Amazon is killing it in terms of retail. Was before the crisis, is doing even better now. I think they announced that they're planning on hiring over 100,000 workers to help their fulfillment centers, and they're probably going to come out stronger at the tail end of this. Now, it's sold off just like everything else in the market has. Microsoft, new leadership, the leadership there is terrific, and they're growing in the cloud. So they're doing very, very well. Think about IBM, where there's new leadership. These are great growth names. And we have to remember in the absence of growth, and to the Goldman Sachs report about potentially a 25% decline in year-over-year earnings in Q2, when there's an absence of growth, when you find it, it's really, really rewarded by investors. And so that's why you want to look at those types of companies where there's a catalyst for growth.
I was talking to one investor today that said, in this environment, stop looking at the income statement and just look at the balance sheet. You're talking about some dividend names that you think we could have cuts in dividend stocks. That is going to happen? Do we need to be...
I don't have a crystal ball, but absolutely, balance sheet strength is incredibly important. So stay away from highly leveraged companies, stay away from companies that have a lot of macro exposure, where you know that their business is going to deteriorate sharply as a result of the coronavirus, and expect dividend cuts. We have a rule at 1879 where we'd always said, if there's a dividend cut, we're automatically going to sell the stock. I don't think that we'll be able to apply that rule and it's, that harshly going forward in this environment, because I expect even fundamentally strong companies with good balance sheets and good cash flows will cut their dividend as either a precautionary measure or because they can.
Looking at this issue, economic, financial, we're now getting policy responses out of Washington, but many people are also talking about some of the technical elements of this market right now, how fast and quick it's moving here. Are you concerned at all about market structure?
Well, I'm always concerned about market structure. I would say this, and I believe you guys actually did a great job reporting about it earlier when I was watching the program. A lot of the selling and volatility that's occurred over the last, week, 2 weeks has been driven by program trading, has been driven by hedge funds that have to do risk parity trades and work through that. That seems to be coming to an end. So we should see a little bit of a decline in volatility over the coming week or so. What I am concerned about is really just investors overreacting, and they're being panic selling. And we haven't really seen panic selling yet, believe it or not. So when we talk to clients, they're staying put right now.
A lot of people say, though, that we actually need to have the panic selling. We need to have the capitulation. And as you just said, we haven't seen that. So does that suggest, if you subscribe to that theory, that there is more to go here on the downside?
Well, I think there is more to go. I don't know that it has to be associated with panic selling. Like I said in the beginning, I think you got to remain calm. We're only a week really into this, 5 days into self-isolation. And I don't know about you, but I'm going a little stir crazy sitting at home. And I think, and everybody I'm talking to is, right? I mean, that's just the way it is. I think a month from now, if we're still in the same position and we're still self-isolated, the world is going to look very, very different to us. But again, most importantly, from an investment perspective, I think you take this opportunity to take a look at your portfolio, sit down with your advisor, maybe harvest some tax losses for the year. There weren't a whole lot to be had last year. And then take a look at which areas you're most comfortable with and which areas you want to be invested in going forward, because this too will pass. I can't tell you when, but historically speaking, it's taken about 2.5, 3 years from the lows to recover and get back to the market highs. We saw it in 2008, 2009. We saw it in previous crises with the dot-com bubble bursting in terms of broader markets, not the NASDAQ itself. That took a very long time. And so, again, I think if you're a long-term investor and you're saying, okay, I've got to wait 3 years to get back to where I was this December, you're probably okay. And if you're not, it's because you're badly allocated.
All right, use some of your time in isolation to rebalance here. Keep it calm and invest in advice from Oliver Pursche, 1879 Advisors Chief Market Strategist. Thank you so much for joining us.
Thank you. Be well.